Yeah, maybe another retest. I mean, with this strength of the US dollar across the board, there's definitely a chance for a retest. But clearly, this looks very, bears are very, I mean, they're getting slower and slower. So no really
Yeah.
strong momentum to the downside. So I think that next week, I agree, could be quite interesting. And as you said yourself, we have this dollar cat potential resistance here at 1.3. But
Yeah.
we really have to keep in mind that US dollar index maybe is even headed back towards the highs. It all depends, in my opinion, how the 10-year US notes will close today. If the yields will stay bullish, then I think that US dollar could see actually more strength. So this dollar cat is maybe
Over
also,
109.
excuse me.
Dollar index all back to new highs over 109. Is that what you're
I'm
talking?
more careful. Still, I think that there is a chance for a pullback first. I'm observing two ideas. It can be actually a very big flat formation and that you will see a drop, or
Yeah.
maybe we are already turning bullish here with 5 waves up. So I'm curious to see what kind of a pullback will form here when we get lower prices. But overall,
Okay.
I think that US dollar index, yes, could easily retest the highs. I mean,
Okay.
you can easily count the drop from the highs in 3 waves as well. So
Okay. So I was looking for this as a failing rally up around these levels. Your view on gold? I think we're approaching the 50% fib and silver the 61.8 fib.
I think that with this dollar strength, we have to be aware of lower, and of course, because the US yield, I think that this gold could see more weakness. I still think this is the first leg, wave A, of a deeper retracement. So watch out for the 61.8%
Yeah.
and this wave two swing low here around 1710. That would
Yeah.
be potential support area. So I think that there is room for more weakness here in the short term. But as I
Yeah.
said,
Not much.
really,
$10 you're talking about.
yeah, exactly.
Yeah. That's an opening. Okay.
And
Go ahead.
also, what I would like to highlight is this S&P 500. Let me firstly hide this one. Okay, so you have the S&P 500 moving into this very important trendline resistance. This downward channel obviously still holds for now. At the same time, we have VIX Sphere Index here at the lower side of this range.
Yeah.
Okay, so what's important is that US dollar index actually found the support and turned higher before the S&P 500 hit resistance. And now if
Right.
we really are going to see even just temporary setback on stocks, I think that US dollar index could really easily accelerate much higher. So watch out for potential pullback here on stocks. I think that S&P 500 could see 4,100 easily in maybe early next week.
Yeah. Okay. Yeah. I heard that. I think. Well, Ben Maldonado, he does timed work, some Gantt stuff. August 22nd was the date he was pointing towards. That's next week. So I don't know. I think he could fade a lot of action next week. What is yields? I thought could get to 3%. I've been talking about 3% for a while on the 10-year.
Yeah, I mean, 10-year is breaking this bear flag. So as I
Yeah,
said, it's important to see how this week will end with the 10-year US notes. And if we see more weakness, the continuation for the US session today, then I really think that we should just respect the big picture that is still in play since start of the year, actually. And we know
not even
what.
not even consider like right shoulder. I know TLT. I
Yeah,
was looking.
I see what you mean. Yes, but
Yeah,
okay, if we see this swing high broken, it
yeah,
was August high, I believe,
yeah,
then yeah, I agree, then we could rally. But as long as this
yeah,
one holds,
yeah.
it's quite
Just got to
neutral.
go with the momentum you're getting today, at least into early next week on everything, is kind of
Yeah,
the message
exactly.
I'm getting from you.
Yeah, yeah,
Okay.
exactly.
All right. And what else here? Bitcoin breaking down.
Bitcoin also obviously in a pullback, it's much weaker. Maybe some Ethereum has a much better structure if anyone is going to look for any kind of opportunities.
How about new lows in Bitcoin and a higher low in Ethereum?
Yeah, I think that's very possible. Yeah.
Okay.
I mean, in this recent turn on cryptocurrencies, we have seen that Ethereum has been outperforming Bitcoin quite nicely.
Right.
And
So,
hey, good morning, guys. And
hey, Blake.
Hey, and Greg, since you guys are talking crypto, you know, one of the big reasons, and you know, I'm doing some, you know, just brief work and understanding kind of what happens with the with Ethereum going through this merge. They you know, it's interesting how one of the reasons why Ethereum is really outperforming Bitcoin is because next month, you know, when they do this merge, it's going to be like a proof of work, proof of not proof of concept, but anyway, it's you know, Dale, it's like 5 o'clock in the morning here, so I'm trying to get my words straight, but it's going to be
Friday,
like 99%, and it's Friday, more efficient to mine like Ethereum over Bitcoin and other cryptos. So there's a big demand right now for Ethereum over Bitcoin. And so if you're trading like cryptos and you want to like exclude the dollar out of the equation because you're just not too sure what to do with the dollar. Yeah, I mean, buying Ethereum over Bitcoin, I think that's like a really, really good trade in my opinion. So just something to think about.
Yeah, and Ethereum overall has a very beautiful structure. So I tend to agree.
Yeah. And good morning, Grega. It's good to hear your voice, by the way. So what's the structure you're looking at with Ethereum?
I'm looking here for a 5-wave rally here. And you can see now I'm tracking this ABC setback, still the first leg of a higher degree drop. And with this, as we talked about, with this US dollar strength, we clearly should be aware that there can be weaker prices here on Ethereum, maybe even 1,400 is very nice potential support here if we get towards this level. So that's what I would be looking for a potential next bounce.
Awesome. And what level are you looking at there?
1,400.
Okay. All right. Yeah, that seems logical to me. Take us over to Bitcoin really quick. I want to see what your count has there, because Bitcoin's coming out of this channel we've been following, and I mean, I think it just sees new lows. I mean, personally, I that's what I'm seeing. What are you seeing?
Well, I was looking for potential wedge here. Okay, like a leading diagonal that can be signaling for a reversal in trends, but since we have a very sharp drop here, we definitely have to see this 20,000 to hold this support. If not, then unfortunately we are going probably to retest the lows. So 20,000 is key support definitely for the next few days, maybe even already this weekend we will get.
All right.
Well, Grega's got clarity. That's why he wanted to come on the show today, because he has conviction. I know you, Grega, after 6 years.
Hey, you know, Grega, while we have you here, I know, you know, we're gonna bring in the rest of the team here in a few minutes, but I wanted to see, could we get your view on the yen? Because we've had this really big move in not only the dollar yen, but really a big move down in the yen just in general. How are you seeing it here?
Yeah, I still think that we are here in consolidation, but eventually I think that dollar yen will be headed higher into this fifth wave, as we talked with Cayman this morning in the chat room. I mean, everything from dollar yen drives or will impact other yen pairs as well. So at the moment when we see this potential dollar strength and maybe higher US yields, I think that yen will also be potentially driving lower versus other currencies as well. So I'm looking here at Aussie yen. I think it has quite a nice structure here. You can see that the market made a very nice ABC pullback. And now we are rallying towards this trend line resistance. So if dollar yen can push back towards the highs, I think that Aussie yen will also make a breakout. And then we will have room for maybe even 100 in weeks ahead.
Wow. All right. Well, that you know, that I would have to imagine that risk appetite is going to have to pick up dramatically in order for that to happen. So
Sure.
So we'll see. But hey, Greg, I'm going to go ahead and steal the charts real quick, and I want to say thanks for coming in here today on a Friday. I know it's Friday afternoon for you where you live, so thank you so much
he's
for
been
being
on
here.
vacation all summer.
He has been, hasn't he?
So he
Almost
drops
like
in,
Steve.
huh?
Almost like Steve.
Oh yeah, Steve, that guy Steve too. I mean, Steve Stelios, he's gone. Everybody, all you Europeans, man. No, but it's great. I mean, it's important to get a reset and spend time with the family. So thanks for coming in and blessing us with your time here today. So we do appreciate it. But Dale and I we work around the clock year round, right, Dale?
My reset button is gone.
so let's go, and I want to hear some of the guys from the Flow Show, Ryan and K-Man. Guys, what do you make of this dollar move? I mean, the dollar has gotten, just came out of its shoes overnight. When I got up this morning, I was like, holy cow, the dollar's just ripping. I did not expect it to just continue to cream higher like it has. But I was a little worried that, we were going to see some risk aversion and the dollar was going to just, kind of blow up, and it has. I mean, I didn't expect it, but I was thinking that it was a risk, and that's what we got. So what do you make of this dollar move?
Hey guys, hey Blake, hey everybody.
Good morning.
Well, I tend to agree with Grega. I don't think it's over. You only have to look at the yields, and I think the dollar is still a buy on dips, but perhaps be as usual a bit cautious against which currency we're doing it. But to various extents, the dollar is still beat, dollar yen is beat, euro dollar is offered. The rest, like the commodity currencies, I think they will depend on how the crosses behave. I tend to agree with Dale. I can't be really bearish Canada, but I'd rather express it through crosses like something like Euro Canada short or Canada yen long. But yeah, I mean, dollar yen, euro dollar, to name those two, perhaps cable as well, because cable is actually weaker than euro dollar this morning.
The cable is absolutely just gotten destroyed. And I tried to play this on the long side yesterday, and that was not the wisest thing. I thought we were gonna bounce off of this.
Shorts are working, Blake.
What's that?
Your S&P shorts are working.
They are. I actually just closed out my S&P shorts this morning.
That was a nice
if you're in the ForexAnalytix community, in the chat rooms, you guys already know I closed that out, and the reasons why. I explained that.
Why? Actually going on vacation?
Yeah, I'm going on vacation. No, if I was going on vacation, I'd be like quadruple leverage short, because when I leave, the market tends to.
Everyone thinks that. I know. When I go,
no, but I was just talking about the cable, though. K-Man, I mean, this
cable
has been
snapped.
It did really break. I think I got to ask you guys, obviously you and Ryan, I mean, what are your thoughts on the cable? Like I said, I tried to buy it yesterday on this, between this 120 and 119 level, right here, because I was looking for this 100. Well, actually, I'm sorry, my average was right around here, and I tried to buy it down here, and then I got stopped out in Asia because I was looking for like the 127% extension, the bigger 618. We just kind of flew right past it, and it ran over me like I was like this little miniature speed bump. What do you make of this move, guys?
Personally, I think the dollar move isn't done, so I wouldn't stand in the way of cable. It seems like the fact that Truss is still running ahead of Sunak, and I'm not sure how it's going to pan out in the end, but he's not having the markets feeling very comfortable. The UK is struggling with its gas and energy prices weighing heavily on the consumer as well. Retail sales are coming off, and it's not a pretty picture if we look at it. Although I am relatively surprised it's doing worse than euro right now, because euro sterling is actually
ripping
quite a bit higher than
yeah.
where we started yesterday already, for instance.
So Ryan, do you think this is a little bit of a combination of, not so comfortable with the Bank of England, not so comfortable with trust, possibly dismantling the Bank of England, then sprinkle some a lot of dollar strength on it. Then you got a good recipe of the sterling getting back down towards 115, 116. What do you think here, Ryan?
No, I think just today and what's going on, I think this is the typical less liquidity in the quid than there is in the euro. We often see when we get moves like this, cable moves more than the euro. Because when I first looked at euro sterling this morning, it wasn't doing anything. It was matching it. It's only recently when cables picked up today that euro sterling has started to move higher up towards 85. I think it's just the as I say, the volatility difference between a more liquid euro. As Kay mentioned on the flow shows, the biggest liquidity currency there is tradable. And yeah, we're just seeing the other side because, as much as the pound or the UK's in the crapper, euro's far bigger. The eurozone's far bigger, and the problems over there are far bigger than because that's 19 countries who have got issues rather than one. So yeah, it's always the way. The pound or cable tends to move, probably a third or twice as much as euro dollar can do when we get these big swings.
High beta play, right?
Yeah.
So, all right. Well, thanks for the explanation. And just so you guys can see this here, the euro sterling is trying to break out. I guess it's trying to break out. I mean, it depends how you want to draw all these lines, but I mean, we are making a higher high, and so I think you got to respect that. So if we continue to see equity market weakness, you might see that underperformance of the sterling as a whole. Now, Dale, you had been talking about getting some dollar strength, and you want to sell into it. So we got the dollar strength.
If it wasn't a Friday, I'd be doing it right here.
So you do quadruple leverage mega
no,
short
1,000
ETF dollars today?
1,000 times.
1,000 times. All right.
Just like I did on the way up.
With no stops,
times.
Because that's what all great traders use is no stops, right?
Mental stop, and then you end up in the
mental stop. I'll give it to 118 on the dollar index, and I'll be short. Quadruple leverage.
And I'll lend you some money to do that with as well, Dale, just so you can get way over your head.
Okay.
All right, guys. Obviously, we're being very sarcastic. You should always, be managing your risk, and and that's exactly what Dale is saying. Hey, there's a lot of risk on a Friday, right?
Yeah. Well, I just, you had a strong week in the dollar, so the trading pattern is normally follow through into Monday, and that's why we have something called Turnaround Tuesday.
Yeah, and this is it's a real, it's a real thing. And you start looking at equities that are so weak. You got to imagine if they continue to weaken, look at the S&P and notice that we're breaking through this wedge, right? We're breaking through this wedge here. If equities continue to weaken, people will run to the dollar as a risk aversion, a hedge. So just keep that in mind. The dollar could extend its gains. I see just so you guys can, look at a few things that we're seeing with the dollar as a whole. There's a 78% retracement up here at 108.30. That's 161% extension of the last leg lower, also comes in at 108.30. Relative strength intraday is overbought, but overbought doesn't mean that you're going to stop, but overbought means it is now a warning, for those of you that are bullish. So I think being it's Friday, knowing that we could continue to extend, I think as Dale's talking, you probably need to be a little bit more, you need to be a little bit more conservative going into the end of the week. And for those of you that are, trading around, this is not the time. Even though we were joking a little bit earlier, this I'm dead serious about. This is the summer. And we're in summer trading right now, and a summer trading environment is low liquidity. You don't want to get yourself in a lot of trouble because it's hard to get yourself out of trouble. Because a lot of moves that you see in the summertime are one way and one direction too. We saw it in the dollar yesterday. You'll you could see that again today, where there's no liquidity, the dollar continues to push higher or lower, and then you get stuck in a trade. You don't want that to happen. So manage your risk, take your position sizes down, so you're not risking as much. And that's how you navigate through a summer, because the last thing you want to do is get yourself in a hot water in the summertime. And, you know, because it's hard to get yourself out, right? Like, don't dig yourself a deep hole. Ryan, K-Man, Dale, do you guys want to talk a little bit more about that? Do you have anything that I didn't?
Never try and make your week on a Friday.
Yeah, well, never on a
winter,
Friday,
fall,
but definitely
spring.
not a midsummer
Any
Friday,
season.
right?
Yeah.
Yeah. So
for me,
Yeah,
it's every
absolutely.
season.
I'm running at lesser amounts than I might be doing otherwise, because the volatility compensates for the lower
position size.
Position size,
Yeah.
exactly. So yeah, absolutely. I just wanted to say one last thing about the dollar yen. You know, we've been trading off that in the room as well. We've been trading off that Ichimoku cloud on the daily. We are above, and it's at 136.30 today. So pay attention to that for the close of the week. I'd say if we close back inside, we might be running into a bit of a failure come the Japan Open on Monday.
Do you think we could really drop down to 136 today? I mean, we're trading at 137 right now. Do you think we could really give that up?
Well, it's only 70 points away. We've done 200 overnight. I mean, we've done 200 in less than a session, right? So yesterday afternoon we were on the face. On yesterday face, we were talking, it was 134.65, and we're above 137. So 70 points lower. Everything's possible. True. If there is an accident. And the other thing I wanted to, because you were talking about risk, the other thing I wanted to add to that is that, and I've been repeating that already, I mean, don't trade yen on the back of risk. Yen has decoupled from risk already months ago. It's purely trading interest rates right now. So it could happen that the correlation comes back randomly, and we have, it looks like it's correlated again, but yen does not trade risk right now. Like, don't trade yen on the back of equities.
Yeah, or you know, I mean, yields. I mean, you know, it's just the yields aren't really going anywhere either. So thanks for that, K-Man. Ryan, what do you have any thoughts before we start looking at the Canadian dollar ahead of retail or ahead of retail sales? Yes.
Yeah, I thought, just to echo what you guys have said, you know, you have to be careful when you're trading summer markets. Pick your levels, you know, pick the levels that you think are going to be stronger. But as for these flows, you know, it can come down to a simple question. You know, if I gave you $1,000 and said, you invest it in the best country right now, where are you going to stick it? You know, you're going to stick it probably in the US. And that's what markets are seeing right now. For everything that's going on, Ukraine, droughts, whatever, inflation, at the end of the day, investors, they will go where they feel the best yield is going to be made.
It is the least dirty shirt in the hamper. And believe me, the US shirt is dirty. That makes everything else really dirty. All right. So yeah, it's a great point, Ryan.
Someone said there's some Canadian debt out.
We have retail sales coming in 3 minutes. So unless it popped out already, I don't know. But let's talk about the Canadian. And you know, this is something that I think if you are a dollar bear, you got to think about, because you know, you look at the Canadian, you look at the Kiwi, you look at the Aussie, these commodity currencies are actually holding up pretty damn good. I mean, you know, you see the euro just, you know, going towards, well, we're nearing, what is it? How many year lows are we at now? I mean, we haven't seen these levels since I got married back in 2003. I think this is in Greece, you know. So yeah, I mean, we are at levels that yeah, I mean, hell, we're at levels we haven't seen in 20 years. But
that's
you take like
that's about the Greek expectation of a position. It's 20 years.
The what?
You were married in Greece 20 years ago. I said
Yeah.
that's about the Greek. What the Greeks expect when they take a position is to keep it for 20 years.
Or when they take money from the Eurozone, that's how long that takes before they pay it back. Oh, we don't have any Greeks here to actually defend themselves today, do we?
Yeah, we should shut up about them.
We should. All right. So anyway, no, you look at some of these commodity currencies like the Aussie, the Kiwi, the Canadian, they are all holding up a little bit better. And I know, Dale, you've been talking about this quite a bit throughout the course of even this week, but you've been mentioning it quite a bit. I mean, look, if you want to play the dollar on the short side, play it on the short side against some of these commodity currencies. However, we do have retail sales coming out of Canada. So let's go ahead and let's take a look at what we've got here. And that's coming out in approximately 30 seconds. So we got retail sales. This is the data flash that comes with ForexAnalytix. Let me go back over to Live Squawk, which also comes with ForexAnalytix. I'm going to bring over a chart, but I'm also going to make this a double just so we can follow the Canadian.
These retail sales are for June, so it's well lagging everything.
But hey, look, people, everybody that's trading the markets right now, and it might only be the five of us that are actually listening in right now at this moment. Just kidding. But look, we're all looking for something to do. So Canadian sales beat. So dollar Canadian might slip a little bit here. Hey, look at the core retail sales, actually a little stronger. So you can see as they come out. What that's probably going to prohibit the dollar CAD from doing is getting back above 130 unless we see stocks continue to implode. So, anyway, and going back to this conversation really quick, Dale, I know you have your interview coming up. I just want to say that the Canadian dollar is relatively, I mean, look at how, we're in this ascending channel. Yeah, it's been there for the last, year, but barely. I mean, if you're short Canadian dollars because you're like, I'm long US dollars, shorting Canadian dollars, and I'm, balls to the wall long, you're probably a little nervous right now because it's just really not performing. And so you have to think about that longer term. I want to say TGIF, everyone. It's been one hell of a week. We prayed for volatility last year at this time. And we've been blessed by the volatility gods in the currency markets. They have definitely been moving quite aggressively this whole year. And I think it's the best market to be in right now. Better than any other market at this time. Trading currencies is where it's at. So if you want to do it with ForexAnalytix. It's $1 for 10 days to try us out. Then you can jump in our chat rooms. If you want to learn how to get ForexAnalytix for part of the package, you could trade through the Trader Funding Program. This is our sponsor of today's show. You want to trade our money and not trade your own money? Take 75% of the profits and none of the risk? Well, watch this 2-minute video at the very bottom of the Trader Funding Program site. I'll go ahead and put that link. I'll put that link in the chat box. And Dale, I hope you guys have a great interview. Ryan.
Oh, will be. Victor Sperando doesn't get better.
All right, cool. Well, thanks, guys. You guys all have a great one. Enjoy your Friday. And K-Man, Ryan, thank you so much for being here every day. And also the free flow show every morning. I want to retweet like the tweet to kind of tell people about it, but I'm always asleep, so can't do it.
Do it in your sleep.
Maybe one of these days I'll peel myself out of bed at 1 o'clock in the morning to retweet and then go back to bed. How about that?
Cheers, guys.
Thank you, team.
All right. Thanks.
Shalom.
Gents.
Peace be with you. Victor, welcome back to F.A.C.E. How are you?
Hello. Can you hear me?
Got you, Vic. How are you?
Okay. Good. Thank you, Dale.
Been a long time. I almost forgot, last time we talked to get you back in the rotation. And I go, God, I have to get Vic back. So you don't have any anything that you want to share, do you?
When you say share, I'm not sure.
All right. Well, there's your mug. I don't know if you want to.
Okay.
I don't know if you want to see what I look like on a Friday, buddy. But
whatever you do normally.
That's fine. I'm not bashful. Okay. So I want to talk about last time we were together. We don't need any charts, Vic. We'll just
Okay,
talk like
good.
this. You know, we're
True.
buddies. We're brothers in arms in the market and the battle. So, what's front and center on your radar before I get back to our last conversation? What are you thinking here, Vic?
Well, I have an opinion on virtually everything, and it's a very strong opinion. I mean, I don't have any, let's say, hesitancy.
You're not strongly neutral anything.
No, I know
All right.
what I think is going to happen, and I'm willing to, put my money in and verbal commitments on the line.
Okay. So let's hear what you have conviction about. We want to start with oil. When we were talking, during the war and, people were talking 150. Did it surprise you that we had that, mini breakdown under 94 support, went to 85? And do you think that's a low? I know you're a bull in crude.
I'm a long-term bull in crude. I basically, when Biden used the reserve to lower the price, plus the Fed, it had to go in correction. And let me give you a reason why I'm flat oil at the moment.
Okay.
I have these things I created that S&P branded called the DTI, the Diversified Trends Indicator, and the Commodity Trends Indicator. And everything I had that was long in last month, a month ago, went short. So oil, we don't short. We go flat for risk of ruin reasons because it only trades once a month. So literally every commodity I have in my trend following indicator is short, except natural gas. That's the only one that's long.
Okay. And so you're just going to go with these trends. You're not interested in buying a break in gold at 1740 or silver at 1920. You need trend reversals to get you in the market.
I am long a lot of gold personally, and in the things I do. I like most people, everybody's frustrated about gold. Gold is a function of two things that are keeping it down: the dollar and manipulation. Those are what's keeping it down. So until the dollar, the Fed stops talking about raising rates as they did yesterday, now it's 75 beeps again at the September meeting. See, this is moral suasion. In my whole career, dating back where I used to read the Fed minutes from the mid 60s, I went back to the 50s. The Fed never did this. This is verbal manipulation. If the markets fall for it, God bless them. They, believe it. The Fed is bluffing. It's lying. It has no logic to raising rates before an election, 75 basis points when you're in a recession. So you either have to take a stand. The Fed is lying and bluffing. They are not going to raise rates 75 beeps. But when they say that, the markets respond, and they should, because the market's made up of day traders. They sell. The longer term traders wait. And
well, you yourself, Vic, said that I asked you once, do you think the Fed is making a policy error? Let me quote you. They always make policy errors. All right. So is it possible that we have a Volcker cocktail with they're going to continue to tighten because they're looking at the labor market, and it's happening during a weakening economy? So you have tightening going on with growth decelerating.
Well, if they put it this way, I don't believe they're going to raise rates. I give them a little more credit. I give them credit for lying because they're a political organization, just like all other politicians, although they claim not to be, which is baloney. But the bottom line is, if they do raise rates 75, now you're talking 208 again, because the economy is falling off a cliff. And I wrote this up about a week ago. The employment numbers are a sham. I hate to sound like I'm critiquing government everywhere I look, but in this case, it's so true. in the last reported numbers, 528,000 payroll jobs created in
Yeah.
July.
Yeah,
Now,
waiters.
2 months of the year, jobs decline always. One is the beginning of the year when they fire everybody from the Christmas season. So you get a big decline in jobs in January. It's almost
Okay.
3 million. Okay, 3 million. So what
Okay.
the Fed does, or the BLS in this case, what they do is they try to smooth that data. So they don't say 3 million jobs counted. Those are counted. Those are non-seasonally adjusted. The seasonally adjusted numbers give license for the government to tell you whatever they want. These numbers are made up. The
You
July
don't think
is,
there's a labor shortage, Vic, during the Great Resignation? The people who, after COVID, just didn't want to go back to work again?
I'm
or
only
retired?
talking. I'm only that's a separate conversation. I'm
Okay.
only talking about the reported numbers.
Okay.
In July, the actual counted numbers were minus, not plus, 375,000 in July. And that
Okay.
is consistent with the last 10 years. The only exception was 220, which I can understand. But 9 out
So
of
it's
10
just
years.
PR in front of the midterm, the numbers that are coming out.
Well, they
And then it
want,
forces Paul's hand to try and slow down a report that's phony. Slow down what's
well, it
behind a
forces,
phony report.
it is part of the agenda to continue to keep inflation down, is to talk it down, meaning to stop people from buying things and also to make them poorer so they don't feel like they can go out and buy things. So the process here is the reverse
Wealth effect.
wealth effect, and that's the policy. So
Okay.
the point I'm getting at is, they tell you you've got 526,000 jobs created. It lost 375,000. There's also 309,000 called, from what they call the birth-death effect, the death-birth effect, which they estimate how many new businesses were opened and people hired, which they never count. It's estimated. It's an algorithm they created in the 80s. So all I can say is you're talking about over 1 million jobs are misrepresented. So the economy, and here's my position now, the economy is falling off a cliff.
Okay.
It's dying, and it's around the world. It's England.
Yeah,
It's
it's worse
Germany.
around the world than
Correct.
it is here.
Correct, but it has an effect on our country. So if you're talking about raising rates 75 beeps, which is the reason you have weakness this week, because that's coming out because the market got too strong. The Fed didn't want it that strong, so they talk it down, which I think is criminal, by the way, because again, they're supposedly looking at they switch from guidance to they're going to be data dependent. Well, if they're data dependent, why are they talking the markets down? I mean, shouldn't they be waiting for the so-called data? You see, it's a big manipulation. Now, knowing this, okay, this leads to, what do? Well,
Fair market rally in equities, Vic.
You don't
This
buy
bounce?
you don't buy stocks and bonds now or the list this week, because you're coming into the speeches at Jackson Hole.
Are you going?
No.
They'd love to see you.
No, I'm not going.
I'm kidding you.
But it's a vacation for the Fed. You can write it off. But the point is, you should be long the dollar still, because higher rates, even though they're talking it up, they have not sold anything from their balance sheets. You hear these excuses. Well, the mortgage backs take 3 months to settle. In November of last year, I've got this on YouTube, so I remember the date. Powell admitted we got to get rid of the word transitory. We're not transitory. That was November of last year. They added to the balance sheet until March, and then they theoretically were supposed to sell. They didn't sell.
They're supposed to start in full forward in September. There has been a trickle of QT, hasn't there?
A trickle means nothing. I mean, that doesn't mean anything. they're supposed to be selling 37 billion a month in a combination of mortgages and treasuries, and then they're going to go to 95, I think, next month. The point is they're not doing anything to really change inflation. All they're doing is talking. Now, it works to a degree. Bonds are less inclined to believe the Fed than stocks. Stocks have said, we don't believe you. We believe you're bluffing. And I've been a bull on stocks until this week. And the only reason I was a bear this week is the market was up 4 weeks in a row. It got very overbought. The volume dried up. Now, part of that is summertime, but it's, we're talking about 600 million to 700 million shares. It can't continue, meaning this rally, without volume.
So is this a trade? Is this a trade for maybe a 38% pullback and then another run? Or do you think this is the end of it and we're going to take out the lows?
Well, it's a trade till Jackson Hole, because you're going to get more information.
Okay.
And then you see what they say. But I don't believe the lows will be taken out this year. I think next year they could. This year, the lows are in. And the reason is, and Dale, this is a political organization that no one mentions. People like me, on YouTube, the pros, they don't mention the election. That's the power of the country. And you saw what happened to Liz Cheney. She got killed. The point is, this election is very important. So my belief has always been that the Fed is going to start to indicate lower rates to help the Democrats as best they can before the election. So you're not going to.
Paul is a Democrat?
He's an establishment guy. He's not necessarily a Democrat or a Republican.
President Trump appointed him, correct?
Yeah, at the behest of, I think it was Mnuchin. He doesn't appoint anybody. He gets told what to do.
Okay.
And in this case, I'll highly criticize him. He is absolutely stupid about who he appoints to what. I mean, he appointed Powell, and then 3 months later, he's criticizing.
Yeah, I wanted to fire him until he flipped and sang Kumbaya with Yellen and Bernanke, and then he flipped.
Exactly. So Trump didn't really. He was recommended to him like everybody else. Ray was recommended by Chris Christie. He's been a nemesis to Trump. Trump appoints people. He needs to go to HR school. I mean, he's got the worst appointment record I've ever seen.
Well, maybe he's going to have another chance.
Well, I believe he's, he, like most humans, will learn. But the appointments, I don't think he's even talked to these people. He appoints them. He doesn't even know who they are.
I want to get back to the markets. And, I know that you're a technical trader. You have views, but you won't go against your indicators and the signals that you get. And last time we talked, you thought there could be a dollar top imminent. And hold on. And we did have a break. And it pulled back from 109 to 104.5. And isn't it possible that we're getting a failing rally up here and we're not going to make new highs? And also, you felt, and I thought about you when Biden went hat in hand to Saudi Arabia and gave a fist pump with the prince. I thought of you. Because relations are still bad. There's still news about, putting women in prison for 37 years for tweets. Do you believe before the year is out that the Saudis will start quoting oil in another currency?
I think that the way to answer that question specifically, they're going to accept as payment for oil a second form of payment, meaning if the BRICS come up with a basket of currencies, they will accept that for oil and not be exclusive to the dollar, but going off the dollar to something else, not yet.
Okay. All right. So bullish a dollar until you get sell signals. I happen to think this might be a failing rally up here. I'm wrong at new highs. I'm looking to short it sometime next week.
All right. Let me just define for you what I see that happened. The Fed did a switch. I won't call it a pivot, but a switch by saying they're going to look at being data dependent, not forward guidance. That's what a strong part of this rally is. Stocks always believed the Fed would come in because the election is such an important feature of this year. So what happened is the dollar was selling off with that, because being data dependent means if you believe the economy is weakening, we're in a recession, forget what they're trying to convince you otherwise, the economy is going to weaken. Therefore, the dollar sold off, because they should be effectively saying we're on pause. They're not going to switch immediately.
Right.
So what happens is now that when you come back in, if you notice, this happened about a week ago, the market rallied so much that they started to come out and talk the talk again. We're going to raise rates 75. Somebody mentioned Citigroup came out and said they should raise 100. You see, it's all manipulation. It's mind manipulation. Now, you got to go with the Fed because, again, they can do whatever they want. They've got a printing press that they're not afraid to use.
So they're not data dependent. They're S&P dependent. So if the market's rallying, they can talk like hawks. And if the market's under pressure, they can put their dove clothes on for a week.
Correct. It's all manipulation. They want their agenda. They don't want the markets up enough to make you feel that you can go out and spend and raise inflation rates by spending. So they want to make everybody poorer is really what they want. That's their answer to inflation.
Okay, well, it's working.
To a degree, it is. Making people poorer works.
Yeah, so, I also want to know what you think about Pelosi's recent trip to Taiwan, and then there's been another delegation there, and then China running military drills. They going in this fall?
Okay, that I don't have a strong opinion. I have an opinion. Okay, just so you know, most of the stuff I have convinced, I put money on the line. I don't believe they're going to go in the near term for several reasons. The reasons are they're in effectively a recession.
Yeah.
They're still fighting their COVID issues. And more importantly, there's potential riots because of the banks. They put tanks in front of banks.
I thought they were just rural banks.
Well, this is spreading. I mean, in other words, it gets around. So my point is, I think they feel safe about what they're doing, and they're going to go into Taiwan one day. But I don't think they want to do it under these conditions, especially with Russia still getting sanctioned and still, in the sites. But they are telling you by all their actions, their military actions, they will. I don't think they'll do it this year.
Okay. Last time I talked to you, you said Russia will win the war. What do you think?
No, they've won.
Okay. You mean because they have control of what they needed, the land bridge, right?
Yes. Well, in everything. I mean, Ukraine is not moving forward in any degree. Now, let me just one thing. If you read Sun Tzu, you'll notice what Putin is doing. He also, there's another Prussian general they follow, which basically says this: you attack the army, you don't attack the civilians, and you don't attack the infrastructure. So Putin is following that exactly. He is not attacking the Ukrainian citizens. He's not attacking infrastructure. He only kills the Ukrainian troops.
That's not what I see on film.
Well,
I see massive. I see cities that look like a nuke hit them.
Yeah.
Are the Ukrainians blowing up their own cities, Vic?
Well, I don't have firsthand information to that, but I've heard that. I mean, you can't listen to our press. I mean, you have to get a well-rounded information. You got to listen to RT. You've got to listen to several experts on Russia. I mean, I don't know if you know I think his name is Steiger or Steiner.
Yeah.
He's on Judge Napolitano all the time. I forget. He's a former Marine. He's an information expert. I forget his name at the moment. But if you listen to the other side, you get a different vision of what's going on.
Okay, and I know that Putin believes in tactical nukes. Is he going to blow up that nuclear reactor? I mean, they're sitting there firing from that reactor. If I'm to believe reports from different sources, they never left that reactor.
Okay. I don't know if he's going to blow up a reactor. I know he does not want to use nukes. Okay. He doesn't have to. He's winning decisively by just the erosion of the army, because he's using artillery on the army. And again, he doesn't want to blow up the cities.
Okay. All right. Well, that's that's something that I'm not seeing, and I want to just get back to wrapping something with the markets and how people could follow you. What's your best idea going into the end of the year?
Well, my belief is the Fed is bluffing. So they're not going to raise rates 75 beeps in September. The economy is weakening and we are in a recession. The jobs numbers are bogus. You can go look at the non-seasonally adjusted jobs. They're the complete, they have to make up 1 million jobs by the end of the year. See, they have to balance at the end of the year.
So then buy everything on the bluff that's depressed.
Well, I'm looking at the market selling off now. You got to wait till Jackson Hole. I don't think the markets go up before Jackson Hole. Now, depending on what they say, you have to adjust your tactics. I mean, if they give you an indication that the economy is slowing and that they may pause, which is the talk, except for the negative talk by some of the FOMC members who are the hawks and are sent out to push the markets down by talking this 75 basis point stuff. My view is they're not going to raise rates because the election will look at Liz Cheney. I mean, that's going to happen. If you go, you cause a recession where jobs are starting to get lost and the economy is plunging, then they're going to lose power for 20 years.
I'd also like to ask you if I said that was the last question, but I was lying. Okay, because I want to ask you about these grains. I know you follow them. They're great technical markets, and wheat has gotten killed because we've gotten some decent weather, beans and corn as well. Does the trader instinct in you think that there's value in this big break that we've had in grains, regardless of what the Fed does? Even if they keep tightening, they can't print corn, wheat, and beans.
Correct. The only issue you're coming into, Dale, is after August, and August is usually the top seasonally for the grains. So you're running into a major seasonal hurdle here. The reason you buy these grains, you buy them in early January, and basically then you've got the seasonals working for you. So I look at them as being in a pause correction stage, and it's mainly seasonal.
Okay. All right. Maybe sometimes have you noticed you get post-harvest lows in October?
Yes.
They ever come early?
Usually not, but I'm sure they have. I just don't remember when.
Okay. All right. Well, Victor, great seeing you and talking to you. And you don't pull punches. We're kindred spirits in that department.
Correct.
So much respect, Vic, and I'm always rooting for you, buddy.
Well, thank you. It's nice to speak to you again, Dale, and thank you.
All right, everyone. My trading warrior brother, Victor Sperando. You can't learn experience, right, Vic? You have to live it.
Correct.
All right,
you have to
buddy.
lose money to learn how to win.
Love it. All right, that's a wrap, everyone. Hope you enjoyed Vic. He's really, it's like talking to a legend. And everyone have a great weekend. Good hunting the rest of the day. And remember, don't just count your your pips or your currencies or your short positions. Count your blessings. See you guys next.